Regulators are asking questions. What does that mean for growth that you see ahead this year? Is it still going to jump that 300%?
Yes, very much so, I believe, actually. I think it's a good thing they're asking questions. We've seen similar things in Europe previously. But I mean, I think one thing to put in perspective here, in 2019, Americans paid $14 billion in late fees to credit card companies. They paid $120 billion per year in credit card interest and fees. And the buy now, pay later services are interest-free and free of charges for consumers. So with that in perspective, it just tells you how much growth opportunity there is to disrupt that industry, try to provide a better service for consumers.
Well, the CFPB launched an investigation into the industry last month, and I'm curious what your interactions with the agency have been so far. Do you get the sense they want to see the industry grow, or they want to take a pause?
Well, I think that as any regulators, when something new comes wrong, right? They want to try to understand it. Is this actually something good or bad? And what's the implications for consumers? Are they following best practice standards? And what's the implications? If you, as I would maybe at this point in time call it more a query than an investigation. But with that said, I think it's healthy. I think they should be asking questions, and there may be aspects of products that where regulation should be improved. It could be changed. We've seen that in the UK as an example, where there's a suggestion for improved legislation that Klarna supports. But again, if you look at the data, which most regulators eventually tend to start doing, we see our credit card, our losses are 30-40% below industry standards of credit cards. So these type of credits are better for consumers because there's an underwriting decision per every transaction, which is very different from how credit card works, where you just get a huge limit and then go out and spend it, and the banks doesn't really care. They just want you to maximize your debt.
But let's talk about what's better for retailers, because as I understand it, most buy now, pay later options ask the merchant to pay 6% of whatever a customer is buying. Merchants aren't happy about paying 2% to the credit card company. So how are you convincing them to pay that 6%?
Yeah, I wish I could convince them to pay 6%, but it was a long time ago I heard any deal that we're in being quoted at those levels. I think that the price has dropped due to competition. I think those were levels that were, slightly crazy at the beginning, but today we're seeing more competitive rates. And to us, it's actually, if you look at Klarna, we compete in a market in Europe which is regulated in regards to interchange, both on debit and credit, and have been able to reach such scale with almost 100 million users now that we can very effectively compete with credit cards from a cost perspective as well. And we have the ambition to reach that economies of scales in the US, with reaching now almost 25 million users. So I think over time, we believe that we can become really competitive when we are both pushing costs of payments down and providing better services for consumers and merchants. So, but obviously, initially when you enter a market, you may not necessarily be able to price there just yet. So I think we're going to see those costs come closer to each other over time.
Interesting. Well, every time you're on, I got to ask you how your thoughts are evolving on crypto. We are currently feeling the chill of a crypto winter. Not sure how long it's going to last. How are you thinking about this and the future of Klarna plus crypto? Right.
Well, we obviously one of few players of our size that have kind of kept away. And as I've said previously, I think about it in two ways. I think about it as an asset and as a technology. As a technology, we've been trying to apply it to somehow make our services work better, become more efficient, or at lower cost. Have just not been able to apply the technology in such a way that it's helped anything. As an asset, look, people put money in all tons of different assets. Some people put it in nice old paintings, and some people in gold, and some people in something else. Like preferably, I really like paintings, more than crypto, but that's obviously a matter of taste. But I'm very worried how it seems to be the case that none of the regulation we have in regards to how to, market assets or equity instruments and so forth that apply to stock. If I would go out and do the kind of advertising for Klarna stock that's being done for crypto, I would most likely end up in jail. And so that is very, very worrying to me, because I do worry there might be some crypto holders that have borrowed money, that have used credit to buy more. And if prices continue to drop, we may see some very negative consequences and some very sad outcomes as a consequence of that. So I sincerely hope that we will at least will see some more sanity around how these products are being advertised, and that they follow the same standards that any other financial investment categories have on them.